puts money in your pocket better. Welcome here. I'm Dr. Lina. I'm Doctor of Business and Technology, and I help professionals turn their income, their 9 to 5, into real wealth. Understanding that your 9 to 5 doesn't build wealth, it just helps you to fund life, your lifestyle, pay bills, but it doesn't build wealth. What builds wealth? It's something else. So let's talk about it today. ETF or real estate, and ask me any question you may have. You can come on the panel on the TikTok side, but you can also ask me any question. ETF or real estate. So basically, basically we talk about if I had to choose, or if you have to choose, because most of the time this is one of the biggest questions that I get every single day. I get it in DMs, I get it in my videos, where people are asking, which one should I invest in? Dr. Lina, I want to invest. You've been talking about this investing. I hear my friends investing, and they keep saying, okay, which one should I invest in? ETF or real estate or individual stocks, or should I not just even invest at all? So let's talk about it today. Welcome, welcome. Here, how are you do? How are you? Happy Monday. Welcome on YouTube. Welcome on TikTok. How you doing? Today we're talking about ETF or real estate. That's what we're talking about. And whatever questions you might have is a question and answer session, which we talk about how are you doing, ETF or real estate, or you don't even know what we're talking about. Yes, it's Monday. We're super excited for Monday. And if you are just meeting me, I am Dr. Lina. I'm a doctor of business and technology, and I help professionals build wealth the right way, helping them to transition from a 9 to 5 to asset to a wealth, real wealth, to generational wealth. So let's talk about it. If you had to choose, if you had to choose to pick and choose, would you invest in ETF or would you invest in real estate? Or you don't even know what ETF is, or you don't even know what real estate is, right? That's one of the biggest questions that we'll have, because one builds wealth and the other builds income, right? Two things. One builds wealth, the other builds income. But let's break it down today. If you have to choose real estate or ETF, right? These are two form of investing options, right? It's the two form of investing option, and you basically can choose which one, real estate or ETF, right? Which one would you choose if you have to choose? Welcome, welcome here. And thank you for sharing the live and inviting your friends. So let's talk about it. ETF or real estate, or you don't even know what ETF is. If you have to invest, where are you going to invest? ETF or real estate? Or you don't even know what ETF is. ETF is exchange traded funds. What does exchange traded funds mean? HKO. Hello. How are you? Mohib, welcome here. Welcome, welcome, and everyone that have joined, welcome. And today we're talking about ETF, real estate, investing in general. Subscribe if you haven't subscribed. You have a lot more to gain than to lose. You don't even have anything to lose. All it takes you to subscribe is just that one click, turn on the notification bell, and I tell you there's so many free resources available for you. Today we are talking about ETF or real estate. These are two powerful wealth building tools, right? That can help you build wealth. One thing is that if you just focus on your income, your sub and like, yeah, thank you so much. Sub and like, really appreciate that. Yeah, thank you so much. So basically, Bubakad, welcome, welcome, welcome. And we're trying to get if you can, we're trying to tap within the first 10 minutes to 10,000 on the TikTok side. On the YouTube side, we're trying to get to at least 10 to 20 subscribers. So subscribe if you haven't. And we're talking about ETF real estate today. These are two powerful wealth building tools. Two of them are just two powerful wealth building tools. And if you have to choose, I get this question every day, not kidding. Which one should I invest in? Should I buy stocks? Should I buy ETFs? Should I buy real estate? Or should I not even invest at all? Or where should I put my money? Should I just save in the bank? These are questions I get every single day. And I'm sure it's one of the questions you probably have. And that's part of the reason why you're here today, right? And that's why we're talking today. Now, understand one thing. Your income is basically, it does one thing, one or two things is what it does, and it depends on how you handle it. It either does, number one, it can either help you to just pay bills, which is what we were all taught, is right. Go to school, get a job, pay your bills. That's what we were taught. However, if you do that, what you're just doing is you're living paycheck to paycheck. You are on hamster wheel that you continue to work to fund that bills, or you would continue the rat race. Basically, that's what you're doing. However, what you do with that income to get to financial freedom, right? It's going to be two things. You use some of the money to fund the lifestyle, pay the bills, but at the same time, put some of the money towards cash flowing assets. What are cash flowing assets? The example is what we're talking about today. Real estate, ETF. Those are two powerful ones. Then we have the businesses. These would not require things that doesn't require your time, right? You don't have to trade your time, but you still get the money, right? Whenever you work, you trade your time, you get income, right? But then when it comes to asset, you put your money to invest, but then it gives you something called cash flow. You are not there, you're still getting money. Subscribe if you haven't. Welcome all 18 people on the YouTube side. Welcome, welcome, welcome. And subscribe if you haven't. And we're talking about ETF or real estate. I'm not. I am not. I'm super straight, my friend. Super, super straight. Awesome. And thank you so much, Bubakadoro. Thank you for tapping out the live. We're trying to get to 10,000 taps in the first 10 minutes just so we can get on the FYP. Incubus, Mohib, Saya, Bong, welcome, and thank you so much for subscribing. We're trying to get to at least 20 to 30 subscribers right here on YouTube, and we're getting multiple followers, because basically you have more things to gain. I have videos that comes out every single week. I have daily shots that would definitely help you build wealth. Okay, so subscribe if you haven't. So basically, as we were saying, it starts with your income first, right? But what you do with your income, that's what helps you to build wealth. That is basically what do I mean by that? If you take all your income and you use it to spend on your bills, all that you're doing is that you are working to pay bills. What that means is that you keep working till you get tired, gray, or to 65, and probably all the way you DIE, right? That's what you're basically doing. However, what should you do differently? What you should do differently is take some of it, use it to pay bills, but at the same time, take some of it to actually, oh, thank you so much, Bubakador. Thank you so much for that. Thank you for that. Thank you so much for that. So basically, and let's keep tapping, let's keep tapping, let's keep tapping, let's keep following and subscribing. So basically, what does this simply mean? What does this simply mean? It simply means that take some of your money, use some of them to fund your lifestyle, use it to pay bills, but at the same time use some of it to also pay for assets. Use it as a down payment towards asset. Use it as a down payment towards asset. Basically, that's what you're doing. All right. So what are assets? Assets are two things that I'm talking about today. Real estate, anything that puts money in your pocket. My still welcome here. Anything that puts money in your pocket, that is an asset. Anything that takes money from you, right? That is a liability. Your bill, that's a liability. That car, that is a liability. Your that house that you're even staying, it could be an asset, it could be a liability. That's a thin line. But that clothes that you're buying and all, those are all liability. But guess what? There are some things that will come by default. You still need it. You still need clothing, you still need groceries, you still need your transportation, you still need your utilities, all of them. You still need housing. Those are standard liabilities that it's okay, you're supposed to have, right? However, when you are going outside of those liabilities, then you are actually, that's where it goes wrong. But what should you do? You fund all those four things that I just talked about, then take the remaining one or even the larger part of it and put it towards something that will put money in your pocket. So asset. So like when I talk about asset here, I talk about smart investing, and I also talk about real estate. Two things, right? And then the business. Thank you for the follow, Dexter. For I talk about real estate and I talk about smart investing. What is smart investing? Investing, simply put, a form of investment where you are spreading your risk. Investing is risky because the market can go up, the market can go down, you can lose money, right? But something that you can actually do that is not going to it's going to help you balance your risk or balance your portfolio, spread your risk, ensure diversification, easy entry. Something like an ETF. What is an ETF? ETF is an exchange traded fund. And let's keep tapping out the live. Let's share the live with our family and friends. Put the forehead and share, right? We're trying to get to 10,000 taps. Let's get to 10,000 taps in the first 10 minutes so that we can get on the FYP. Let's keep doing that. So basically, um Desta Myalistic Index, let's keep tapping out the live. Thank you so much for doing that. I appreciate that, so we can get some more people and also have your friends. Let them also invite them over to come and learn, like build wealth, right? And if you are just meeting me, I'm Dr. Lina. I'm Doctor of Business and Technology, and I help professionals or individuals turn their 9 to 5 into cash flowing, so that they can get the financial freedom. Financial freedom is what we talk about here, right? That is what we talk about here, because that's the goal. The money is just a tool towards one thing: financial freedom, not trading your time for money, living life at your own terms. Now, once you save some of your money from your income, like I said, start with your income. You put some of them towards appreciating cash flowing assets. So, like smart investing. Smart investing I talk about is ETF. Why do I talk about ETF? When you go on Google right now, I always say on the social media, trust but verify. Go and do search as well. Get another gadget and check. Where does the multi-millionaires and the billionaires, where did they put their money, right? I did not say millionaires, multi-millionaires and billionaires. Number one that you would see index funds, right? You would see real estate, you would see businesses. What you will not see there, you will not see day trading, you will not see options trading, you will not see penny stock, you will not see all of those things, even though a lot of people talk about this. Then also, you can also Google Hathaway, right? Berkshire Hathaway. That is Warren Buffett. Warren Buffett they call him the Lord of Investing. Why? Because he had made so much money in the stock market, and he keeps it very, 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 very simple, very absolutely simple. Because he's found a strategy that actually works. What does this mean? It's simply, when they asked him, they said, Mr. Hathaway, where should we, Mr. Warren Buffett, where should we invest our money? Which stock should we buy? He said, instead of you don't need to buy a single stock. Just buy a basket of stock. What does basket of stock mean? It's simple. What does stock mean? Stock is a form of investment that you want to invest in a company. So give an example. A lot of us have iPhone, right? Instead of you upgrading your iPhone every year, for every single time you want to upgrade your iPhone, take that money to buy Apple stock. Apple is the owner of iPhone. They're the makers of iPhone. So basically, what you're basically doing is what you'd rightly do there, you convert yourself being a consumer to being an owner. And guess what? An owner is a person that actually builds wealth. An owner, somebody that owns something, because when you have ownership, you start getting funds back. You start getting cash flow. That's what you just think about it. That your phone that you bought, that iPhone that you bought 2 years ago, how much is it right now? It's probably lost all its value. It just took money from you. It did not give you money. But if you put the same money, welcome Adam, if you have put the same money towards the Apple itself, like the ownership of the company itself, what you realize is that your money would have actually increased. So always change the mindset from being a consumer to being an earner, right? To being an earner, because that is how you build wealth. So having said that, so basically you are buying. What does investment, what does stock, what does stock mean? What does share mean? Share stock simply means that this is how you are investing, buying a share, some of a particular company. I use Apple as an example. Amazon is another example. We all know Amazon. You can say that, okay, I want to buy a bit of Amazon. a bit of Amazon with your $1, with your $100, $100,000, and whichever amount you have, you can easily buy a fraction, a portion of that particular company that you want to invest in. Now, that is stock. That is individual stock. You can buy fractional, you can buy all share, you can buy, that is individual stock. However, what Mr. Hathaway, what's it called? Mr. Warren Buffett, when they asked him, right, that have you accumulated so much wealth? What he said is that, you see this basket of fund, I do not have to, because Amazon can go down tomorrow. What's it called? Rivana, welcome. Thank you all for tapping out the live. We're trying to get to 10,000 likes in the first 10 minutes. So if you can all keep tapping out the live, that would be absolutely amazing. So when they asked him, so he said, instead of you picking a stock can easily go down. And I was going to show us something on BlackBerry. At some point, BlackBerry was super high, right? The stocks were very high, right? But there was the GameStop. But at some point, guess how old I am. Guess. Guess how old. Yeah, at some point, it's right now, BlackBerry went all the way to $1 or whatever. Now it's back, it's like $5. So for people that have been waiting on the side, BlackBerry just went up. They have something with NVIDIA. They're partnering with NVIDIA. So if you've been waiting on the sideline, you have BlackBerry stock. You got stock when they were doing those GameStop, whatever then, right? You can just look at your stock. You might just get lucky and it's growing right now, and just, so, but that's not beside the point. You can easily lose all your money, right, on one stock. But how should you invest smartly? How you invest smartly is to diversify your risk, spread your risk, diversify your portfolio. What does this mean? ETFs helps you to do that. You can easily buy with one stock that you buy or one unit that you buy. You can buy up to 500. You can buy up to the entire US stock market. You can buy the entire international market. You can buy as many, right? So the popular one that everybody knows, S&P 500, right? S&P 500, the top 500 companies in the United States, right? It has returned between 8 to 12% for the past 30 years, averagely. So it just simply means that it has returned averagely 8 to 12%. It means for the past 30 years, you can almost guarantee that even if you leave your money there, you're going to get a similar return. That's what you're going to get. And by the way, maybe you would have said averagely. I mean, they always say it has returned this in 30 years or 40 years or whatever. Remember, they always say averagely. What does this mean? There's a time when it can go all the way to 25%, and there's a time when it can become 4% or 3% or 1%. So it's an average. But because the strategy is not that you are not day trading, so whenever it goes down, you are not bothered about it, right? Because you are in there for long-term investing. It helps. It's more of, that's why you are more in terms of the time you are in the market for some time. And because you are in the market for some time, you are going to be enjoying that growth automatically. Last year, it returned 18%. What does that mean? If you had put $10,000 last year, you would have gotten $1,800. Your money would have been almost $12,000 at the end of the year. If you had put that same $10,000 in Bank of America, Chase, or Wells Fargo, you would have gotten your 0.01%, which is $1 on your $10,000 a year. So I would rather take $1,800 over $1. But guess what? A lot of us, what do? We prefer to save, right? We save it in the bank. The bank is using your money to trade. But guess what? They are giving you pennies. They are not even giving you anything. You are also still paying maintenance fees. So that is why they say that if you are saving money, yes, it's for safety. That's what you are doing, but you are not growing it. But when you don't grow your money, you are not building wealth. And on top of the fact that you're not growing your money, it's what is even worse. It's worse that you are not growing your money, but what is even worse is the fact that inflation is eating your money. So it's even okay if your money is the same thing, right? You put $10,000 and you still meet your $10,000. Yes, it's not growing anything, but you meet your $10,000 every year. But no, you are actually losing money, because every single year you see that 3%, 5%, or 3.5% that you see. It means that your $100 that you have, for every $100 or for every $1, you are losing about 3 cents, or whatever. That's what you are losing on it. So saving money alone does not, it will not help you to, it's, you are losing money, the fact that you do not invest. So not investing is not an option. Right? It's not an option. So, having said that, now that we established that not investing is not an option, how then do you invest safely? ETF helps you to do that. Okay, ETFs helps you to do that. Let's keep tapping out the live. Let's keep tapping out the live, and let's be subscribed here on the YouTube side. True Eden Mayalistic, we're trying to get to 10,000 within the first 10 minutes, so that we can, yeah, hi True, welcome, Eden, thank you all. Let's keep tapping. I know we are all locked in. Let's tap in. And so on the YouTube side, I know we don't have the tab, but you can show all of the hats. You can keep tapping all of those hats, and subscribe if you haven't as well. I am Dr. Lina. I'm Doctor of Business and Technology. I help you transition your 9 to 5, that your income, into wealth, real wealth. Right? That's what I do here. So if your goal is to build wealth, yeah, time wealth, money wealth, peace wealth, and health wealth. If that's your goal, then you're in the right place. I don't talk about get rich quick scheme. I talk about wealth that is solid, that is going to help you over time. So let's keep tapping out the live. Thank you so much for doing that, Adam. Really appreciate that. True, let's tap out the live. Thank you, Mayalistic. Happy Monday to you all. Let's get to 10,000. It doesn't cost you anything. And subscribe. It doesn't cost you anything as well. It just costs you your fingers. That is how you're showing love, and also blessing others, because we have some more people being sent here through the FYP, just because because of that. All right. So having said that, ETF is a basket of funds, right? Just like an S&P 500. What is an S&P 500? It's the top 500 companies in the United States. So you have companies like Google, like the top 500 companies. Like I always say that they're like the economy pillars, like they hold the economy, because if these companies goes down, what happens is, you know that something is wrong with the economy, right? So you have companies like Google, Microsoft, all of those top big companies is what you have there. 500 of them, that's what we have in an S&P 500. Okay, so and it has returned 18%. It returned 18% last year. So think about it. If you put your money there, right? Even with, there's something called the rule of 72, and I have it in my latest post today. The rule of 72 says that your money doubles every 10 years. So with a basic S&P 500, even at 8%, a basic S&P 500, your money will double in 6 years, not even 7 years. It doubles in 6 years. So it means that, let's assume you put 100,000, your money doubles, it becomes 200,000 in year 7, right? In year 14, it becomes 400,000. In year 21, it becomes 800,000. And in year 28, it becomes $1.6 million. And you're wondering, how come we don't have millionaires? That is it, right? That is it, because a lot of time people are not patient. People are patient. They are patient to work for 9 to 5, clocking for 9 to 5 every single day for 45 years, from age 20 to 65. And that's okay. But then when it comes to investing and say, okay, invest this and keep it there for 10 years, it becomes $1 million. Then people would say that, oh, 10 years is a long time, and they don't stay, they don't wait, okay? But we all need to change our mindset. That's why part of what I talk here, it's not just about, the money and all of that. Number one thing I talk about here is mindset shift. You need to unlearn and relearn, right? Because if you want to build wealth, then you want to learn something that works, right? Your 9 to 5 is just a tool, right? That's it. Angela, welcome here. Welcome here. So ETF, like I was saying, it's a basket of stocks, right? And you think about it. Why does the multimillionaires and billionaires put their money, right? Why do they put their money? The reason why they put their money there is because they cannot afford that risk, right? It's easier not to get to the top than to get to the top and lose it all and get to the bottom. They don't want to do that. So what do? They diversify their risk. What does this mean? 500 companies, right? If one company goes down, you have the remaining 499 that is holding them. You know that you can never go to zero. Think about it. The top, and this is not like it's set in stone. That's not how it's created. No, no, no. It's not like, oh, you know what? This once you get to the top 500 companies, all these 500 companies will remain there. No, they're reviewed every year, I think every quarter. If they don't do well, every quarter they bounce it, another person bounces up, right? Another company. So it's like it's keeping them on the check. So it's not it's a point in time. So it's not like a standard. It's a point in time. S&P 500. So you will see some companies that were there last quarter, this quarter they're not there. So it's a function of performance and for you to be there. So it's like the best in class companies. That's what you find in that basket. So if you are investing in a best in class 500 companies, then you are sure that your money is almost safe, right? And that's why the multimillionaires and the billionaires, why they put their money right there. Otto Junior, thank you so much for the likes. And we're trying to get to 10,000 likes in the first 10 minutes. If you can keep tapping out the like, that would be absolutely amazing. I know we are all locked in. Like I'm locked in, but it just helps so that we can have some more people come from the FYP. Learn this. Takes the same effort to teach 100 people. Let them get their financial literacy, be financial literate. Let's cover the gap, the knowledge gap when it comes to finances, right? Let's cover it. So you are helping others whenever you share and you like, and whenever you subscribe as well. So thank you for doing that. Thank you for blessing others. Okay. Having said that, S&P 500 is one, right? S&P 500 one is return 8 to 12%. Another one that I talk about is the NASDAQ 100, right? Oh, okay. Before I move away from S&P 500, so you're wondering, how do I buy this? How do I invest in this? That's the next question people always ask me. You can't go to the bank. You can't go to Bank of America and invest. No. The Bank of America has their investment, and which is Merrill Lynch, Merrill Edge, depending on, anything above $500,000, they would Merrill Edge, is it Merrill Lynch will handle it. Anything below $500,000, it's handled by Merrill Edge. So most of the time, whenever you see them, investment banker, they handle Merrill Edge, right? So there is Chase as JP Morgan, right? That's why JP Morgan Chase, right? JP Morgan is the investment arm of so whenever you want to open an account, another popular one, the three popular ones though, just like we have Bank of America, Chase, and Wells Fargo, the most popular that we have, the top three when it comes to investment banking, we have Fidelity, we have Charles Schwab, and then we have Vanguard, right? The owner of VOO, popular S&P 500 VOO, that is Vanguard. Then there's also Robinhood, which opened about, I think, 5-7 years ago. Also a decent platform, right? But it's way younger. Then we also have some other ones like Empower, Ameritrade. There's so many of them, right? The only thing I will tell you is go on Google, look for the one that is best fit for you. I've told you the top three, and I've told you, and just look. Based on their platform, based on their review, do that and open the one that you feel comfortable with. Once you open that, then you want to buy S&P 500, then you just simply you can buy, the ticker symbol is VOO, IVVSPY. Those three, any of them, they're about the same thing. They track the same S&P 500, right? If you want the index fund version, so there's ETF, there's index fund, right? They are the same thing. The simple difference is that ETF, you trade it like stock. So even when you go on your platform, they will say stock or ETF. So you trade it like a stock, right? However, index fund is the same thing, still track the same thing, but it is traded, it's settled, it's when it's at the end of the trade for the day at 3 p.m. or 2 p.m. At 3 p.m. That is when it is settled, and then that's when okay, this is the price and all of that. So that's just the difference, but they track the same thing. And with IVV, with SPY, with VO, those three, that they all still track the same thing. But the difference between the three of them is that the ownership, who owns it is what differs. And that's why you see they're different. hundreds of ETFs. There's ETF for oil, there's ETF for crypto. There are different kind of ETF. The only thing is that the names might be different. There's the entire US stock market. You don't want US stock market, you want the entire international, right? There's ETF for real estate called REIT. There are different types of ETF, but what really differentiates them from their ticket symbol is the ownership. Who owns it? Is it if it's ETF, is it an index fund? Who owns it? Like the VOO is S&P 500 for owned and managed by Vanguard, right? Owned and managed by Vanguard. SPY is owned by State Street. The other one, IVV, is by BlackRock. So it's the brokerage firm that owns them, right? They are the one that manages that portfolio. Basically, when I mean own, they're the one that manages that fund, right? That is just the difference. And all of them are just done almost the same thing. They've done pretty decently well, right? The fee structure might be different, maybe 0.02 to 0.03. It's not so significant. Last year, they all did between 17%, 18, a little bit above 18%. So any of it is good. Otto Junior, thank you so much for that. And for everyone that just joined, Eden, True, Mayalistic, Mocho, how are you? Oh, welcome, and on the YouTube side as well, welcome, subscribe if you haven't. So ETF is a good investment, strategy, right? Because it helps you. Why is it? There's ease of entry. You can open the account right now and fund the account and set it for recurring, set up automation, and guess what? You are good to go. You are definitely good to go, and you do not have to do any other thing, and your money will keep growing or year in, year out. You are getting 18%. The day when it's 4%, you get it. And guess what? In rule of 72, your money doubles in 6 years, 7 years. Amazing. Versus when it's in the bank, inflation would have taken out of it 3.5 every single year, or 3 to 5% every single year. And then you also have maintenance fees. And of course, you get a 0.01%, right? So yeah. So that is just the difference. Then the other part of it is that it helps you to spread your risk. Unlike individual stocks that you can lose everything, when it comes to ETFs, you cannot. It's almost guaranteed that you cannot. So think about, why do I know? ETF has not. S&P 500 has returned averagely 8 to 12% for the past 30 years. So it means that even with 2008 crash and everything, it's still averagely, the people that still invested from that time or before that time, they still made a lot of money. They still doubled their money. That's what it simply means. Remember, it did not say every year. It says averagely, right? That's why we push long-term investing. That's what we talk about here, long-term investing. So ETF is basically, I always say ETF is your foundation, right? It helps to motivate you, right? It does help you to motivate you when it comes to investing. Is a good place to start, right? It is a good place to start. Now, I always say that it's like your foundation, wealth building foundation. Now let's now talk about the other thing, real estate. Real estate is, or let me give you another example of ETF. So there's the S&P 500, there's the NASDAQ 100 that tracks the technology. There is the ETF for RET, for real estate, that's RET. There is also SCHD, like for dividends, right? For dividends, that would give you the growth. It gives you also dividends. So what are dividends? Dividends are anything that dividends are basically profit sharing. Think about it as profit sharing. So every single time that the company that you invest in, even though it's growing in terms of it's having growth, but whenever they make profit, they also share it with you. All right. So you don't have to sell the stock, but every single quarter, every single month, you will still be getting return on your investment, like a cash flow, right? So that is the beauty. So you probably would have heard some people say, oh, I have my money, but then at the same time, my principal is still there. I'm just living on the dividends, right? That's it. Your principal will still be there. You don't have to sell it, but you can simply be living on a dividend, which is cash flow. Okay, so now having said that, and thank you all for tapping out the live. Let's tap out the live. Let's get it to 10,000. Otto Junior, Adam, Moto, True, Mayalistic, and every other person here. And subscribe if you haven't. I'm Dr. Lina. I'm Doctor of Business and Technology, and I help you transform your income, your 9 to 5, into a wealth, a long-term long-term wealth, long-term wealth, because you get the financial freedom, which is time wealth. You get the health wealth because you have peace of mind, the peace of mind, and then the money that you will need to use to enjoy those life. Right, that is what I get to teach here. I'm a doctor of business, and of course, I own and manage double the real estate portfolio. I've been investing for close to 2 decades, and I just basically share whatever my knowledge. I'm also a vice president of technology and also a professor of AI, cybersecurity, and deep learning. So I'm a wealth coach as well. Awesome, great. So having said that, the other thing that I talk about is, like I said, real estate portfolio, double digits of that over a decade investing. Real estate is the real estate is one asset class. So we have smart investing, easy entry. We also now have within the real estate its own benefit is 5 things. Six. You have 6 paycheck when it comes to real estate. Thank you all for tapping out the live. Thank you so much. Thank you for subscribing. Thank you so much. Right. So basically, it gives you 6 paychecks. It gives you 6 paychecks. What does this mean? Paycheck number one, there's the cash flow, which is the very popular one. Tenants pays you use the bank's money, you buy a property, you pay mortgage every single month, but then the tenant is the one that pays you, right? You get the rent from the tenant, but then the tenant pays you. It pays the mortgage. Then you have the difference because the 1% rule says that your rental income should be higher than your mortgage. It would be ideally, right? It would be higher than your mortgage. The difference between the mortgage and the rental income, that difference right there is cash flow. Rent is 2,000, mortgage is 1,500, $500 is your cash flow. The second paycheck you get is equity. Every single time you pay 1,500 to the bank, what happens? You reduce your loan. That gives you equity in the property because that is actual cash that you have in the property. What does this mean? It simply means that the money that the tenant is paying and you are paying the bank, you can tell the bank, please give me my money back. Give me some of this money back. You can get it through ELOC. You can get it through cash out refinance. That is strategy right there. This money, you can use it to go fund another deals. Or you can use it, which is what they call BRR strategy. You can use it to go fund another deal, or you can decide to say that, okay, you keep it there till the day you need it. Then the third thing, right, which just like the rule of 72 with ETFs, right, there is also in real estate, it is the rule of 10 years. But I heard that with the current rate, it is hard to get a mortgage with rent higher than the payment. It depends on your location and it depends on how you're buying, right? We're going to get into it. I have a full, real estate system that would help you with that. And I'm going to get into that. The real estate system is going to tell you exactly what you need to do. Because if you're in a certain market, it's almost impossible. Of course, there is also the part of, the class, the community, like because there is a B, C, D neighborhood, right? There's something called A, B, C, D neighborhood because there's a situation where you trade appreciation, which may put more money for you, right? Also, but it's a good question. It will put more money in your pocket. Long term, you might not get cash flow, but it put more money because your property, when we say that property appreciates in 10 years, somebody was still saying our own property appreciated, doubled its value in 7 years. Yesterday, that was Oleb. She was saying that our own property doubled in 7 years. But guess what? She's not getting so much cash flow right there. But guess what? She is doubling her money, which is more money than even the little change that you're getting in terms of cash flow. But the rule is, if you buy it right, you realize that, and you place it right, you should have at least some cash flow. Okay, at least some cash flow. Lover, thank you so much for joining and welcome here. Welcome to the party. All right, but then we will talk about it. There is a like a real estate system, the entire system that that I would share with you, that you can actually use, that would help you decide, are you going to be doing appreciation or cash flow, and know the neighborhood, all of that, so at least you're well informed. But if you buy it right, absolutely you should have cash flow. All right. Do I have a property that did not cash flow? Yes, absolutely. But that person property had doubled in less than 10 years. Iboni, welcome here. And so, having said that, the rule, ideally, the rule is that you have a cash flow. So 1% rule, there's 1% rule. The 1% rule is 1% of your rent. Your property should rent for 1% of the property value. So rental income should be 1% of the property value. Property is 200,000. The rent will be about $2,000. That might not be applicable in some states like California and all of those, where everything is super expensive, right? So, but then it is a general rule, right? So if you have that, you should be able to have cash flow. You have equity that you can take out through cash out refinance. You can take e-lock. You don't have to sell it. Or you can, guess what? You can simply sell it, but we don't sell, right? We don't sell, because when you sell, that is when you trigger capital gain taxes. We don't sell, right? But then there are strategies. Then how do you take out your money? We'll talk about it. So appreciation is the third thing. Appreciation, real estate doubles its value every 10 years. ID is 10% every single year. It doubles its value. Our own property is 8 years. It's already doubled its value, and it's going to 9 years right now. So it depends on where you buy it. So it's A, B, C, D neighborhood, right? Then appreciation is the third one. Then the fourth one is tax benefit, and I'll show you this, right? This is tax document. I'm doing my taxes, right? These are tax documents, right? This is from IRS. I'm still doing it because it's a lot. So see, this is tax document. You see it right here. So this is from IRS website. You see, these are the number of things that you can actually claim in terms of taxes when it comes to real estate. This is like a real estate form that you fill. It tells you rental income, right? The first thing here is rental income. Then you have these whole list of things that you can claim when it comes to real estate. So those things that you claim, that is a lot of money, or a ton of money, because that would help you reduce how much your W-2 taxes, how much your taxable, not your taxable income, your taxes that you are supposed to pay. It helps you to reduce this. It reduces it to the point that you probably will get some money back, regardless of how much you're earning, especially if you make decent income. What you realize, even if your income is not so on the high side, what you realize is that you're going to make a good, you're going to put some money in your pocket at the end of the day, right? I've had somebody that her own taxes, one of my clients, her own taxes, she was making so much money. Her tax in a year was about 70,000. Year one, she was 50,000. Year two, it was 70,000. The following year, she said, no, I'm done. She went to buy 2 houses in that year, and guess what? Her taxes reduced to like 12,000, even though she made more income that year, right? And then from there, she got to the point where she's not paying anything. From there, she is not even getting money back from IRS. This is the same strategy that the multimillionaires and the billionaires use. Remember, they had the access to change the tax code. That's what there would be the reason why you might be paying more taxes than Mr. Trump. You might be paying more taxes. I'm not saying anything wrong. But the reason why I say this is that because there's a Trump Tower, it has so many in investment. And that's why you have a whole lot of multimillionaire. When you go and Google how many wealthy people, multimillionaires and billionaires, have money in assets. You will find it right there. In real estate, you will find it. That's the reason why because they can easily claim taxes. They can end up, there's the one that I saw that, because the person has a golf course, and on certain part of the golf course, they use the part of the golf course for raising, like, he has horses, and then he has some cows, a little bit of camels and all of that. And because of that, the tax that he's paying is it was less than $300, on a almost $70 million home. But guess what? Your own house is less than $300,000. Guess how much you're paying? $6,000, right? On a 500,000 home, I tell you, especially here in Texas, I'm paying about $11,000 a year between the MUD and and the property taxes. So it can get crazy. So that's why you're paying so much taxes, right? But guess what? With all of these things that I'm saying, I will use it to reduce my W2. I use it to reduce all because it becomes an expense on property side, right? I use it to reduce the income, right, on my W2. And that is how you do it. That is how you see when they're saying that the middle class pay the highest tax in this country, in the United States, or even in most places in the world. That is the reason, right? Because the multimillionaires and the billionaires, they know a way around it. And that is, it's within the tax code. See, I just showed you, this is tax documents. It's like, it's not like somebody printed a cheat. See, it's for those people that are familiar. This is within the tax, yeah, like, I mean, this is IRS website, right? That they printed it out. This is coming from my tax consultant. I'm not a tax consultant. I have a professional tax consultant that actually file my taxes because I can't do it. I'm not a professional when it comes to that. But these are benefits of real estate. If you don't have real estate, you will pay this full W2. Hey, Tiffany, how are you? Welcome. How are you going with the course? Tell me you have started reading the course. Well, congratulations, and leave us a review. Leave us a review on the course. Yeah, guys, like that. Thank you so much, Otto. Thank you so much. Let's keep tapping out the live. Thank you. Let's share out the live. So basically, that is how you increase. That is how you increase your wealth. See, the money that you're supposed to go and pay IRS, you can literally, that down payment, you're saying that, oh, I need a down payment for a property. That down payment is what you're paying to IRS. That down payment right now is what you're paying to IRS that you need, right? So basically, and Tiffany can actually talk. I believe Tiffany, you are the one that got the course, right? You are the one that got the real estate systems. So basically, real estate is real estate and Moto too. Moto, I believe you got it too, right? So real estate it's the other way that you get another paycheck. So I talked about cash flow. I talk about equity right now, but just afraid to buy. Okay, then you have met the right person. You should not be afraid. You should be afraid if you have not gotten the training. Okay, Otto, you should be afraid. You shouldn't be afraid. Right now, you have the down payment, right? Because of the interest. Ha! Because of the interest, you can claim it. Let me show you so that let me see. Let me mirror the. Let me flip. How do I flip this guy? Okay. Where are you? What did I do? Guys, I just showed you my office. Good that it's clean. So I was going to mirror. All right. So let me show you so that you see. Krista, thank you so much for the follow. Let me show you. Can you see? Let me know if you can see. Can you see? Can you see line 9 interest? See instruction. The interest, you claim it. So a lot of times, that's why a lot of times maybe you hear passion in my voice, and I'm like, people are leaving money on the table. Stop leaving money on the table. So you're worried about the wrong thing. Okay, you're worried about the wrong thing. Even if you make you're worried about the wrong thing. So if you have the down payment. Yeah, you are good to go. You are good to go. All right. So having said that, real estate would help you. So I talked about appreciation. The other thing that also the other one is leverage. With ETF, you want to buy 100. In short, you want to buy 10,000 worth of ETF. Or stocks. You better have your 10,000 in the account. It's not possible for you to go and buy, right? But with real estate, you can with $12,000, you can buy a property of $250,000 using an FHA loan. With an investment loan, you can actually, thank you so much for that. With an investment loan, you can actually buy 20% down. You can buy 200,000 house with a 40,000, 45,000 with the closing cost. That's it right there. So with 200,000, 250,000, you can own assets of $1 million. And there is no other asset class that is going to ETF. You can't do it. Maybe business, you can leverage it a little bit more, not this level of leverage. Let's keep tapping out the life. And thank you so much for tapping out. Thank you for sharing the friends with your friend. Let's get it to $10,000. So that is the other one, leverage, right? But do not over leverage. Leverage is the fifth one. Then the sixth one is using other people's money. Guess what? You use the tenant's money. You use the bank's money to buy the house. You use the tenant's money to pay for the house, and then you use the IRS money, government's money for every other thing. That's it. That is it. Thank you so much for the gift, CC style. Thank you so much, and welcome here. Yeah, that is it. So really, that is 6 paychecks. CC style, Auto Junior, Moto, Tiffany, True, SS3, Mayalistic, Ukechukwu. That is how you build wealth. See, literally, I just gave an example of my friend, my client paid 70,000 was her taxes. 70,000 was her taxes. And how much she had to pay back. Guess what? She went to buy house the next year and bought 2 houses the following year. That following year, her taxes reduced to 15,000. She had another $60,000 to buy another property the following year. That is how you can either be giving it away or use it to invest. So investing will grow your wealth. Just like inflation eats your money when it's in the bank, you can keep it in the bank, but inflation is eating it away. So it's a lot of time, I always say it is just so easy to make money, but a lot of time people are always thinking that, it takes so much to make money. If it's so hard to make money, then the people that are digging the ground, that are on the sun, like really, really out there, those should be the wealthiest set of people. Don't you think about it? If making money is about the hard work, right? Then those are but guess what? It's not those people that are it's the people that are not even working right now, like your employer. Please, can we talk about after this session? Oh, absolutely true. Absolutely. I'll show you how to get that done. Absolutely. Absolutely, it's the way to go. Thank you so much for that donut. I love it. I'm going to get CC style. So basically, and that is how you do it. Real estate. I'm just so passionate about it because a lot of people, guess what? Your vacancy, your repairs, all of those things you claim, all of those things, right? Just have your invest, and I can say this confidently. You know why? You too. All right. I can say that confidently because I'm not the one that is filing the tax. And the person that is filing the tax, these are companies that have been filing for more than 30 years. They've gotten an award in Texas and all of that. So if I'm doing anything wrong, of course, they have an integrity. So I'm not doing nothing wrong. That's the same reason why Mr. Trump, that's because he has Trump Tower. That's why you are paying more taxes with your 200,000, 150,000 income. You are paying more taxes than him. So let us just wake up. Okay, having said that, real estate. Real estate, right? And there are so many types of real estate, by the way, so many types. This is single family home, right? There's also this multi-family home. There is the land. See, a lot of time people always think it's just rent. There is real estate as a business. So if you want to 10x your money with real estate, there's that option. So it's all up to you. People just limit it to be like, okay, I don't want to deal with tenant. You don't have to deal with tenant. You don't. This is deep, and then you can 10x your money, 10 out your investment, not even doing that. And thank you all for tapping out the live. Adam, thank you for tapping out the live. Costa, Auto Junior, Moto, Adam, Tiffany, True, Justin, SS3, Mayalistic. I'm just very super passionate. Thank you for subscribing here on YouTube as well. And if you are not, you're just meeting a Dr. Lina, Doctor of Business and Technology, and I help professionals turn their 9 to 5 into wealth. Turning this 45 years journey into 10 years, right? To a 10-year journey, building generational wealth. That's what I do. That's what we talk here, right? I have used it for myself. It's helped me to enhance wealth. And I'm just sharing whatever thing I have learned in my journey just so I can bless others. Basically, that's what I'm doing. All right. So in terms of it, ETF has its own. ETF is just basically a foundation. I call it foundation, right? If people would say ETF or real estate, I would always say you don't need to pick and choose. I get the question every time, just the same way when you ask me which stock should I buy. I will tell you no. Don't pick and choose. Just buy the basket of fund. It helps you to diversify. So the same way when people say ETF or real estate, I would say right there. So I'm not one of those people that will just tell you. I have it in what's it called? I have this knowledge in the book because I'm a doctor of business, right? But I have also built knowledge by myself. So these are books. So these are, and they're not just that I'm reading. The Richest Man in Babylon, you see? Morgan also, see? These are books. And you see, the BRR strategy that I just talked about. Dave Ramsey is also here. So I am not one of those people that just talk by word of mouth. So I'm glad somebody caught it. There's still more. I still have some more there. Yeah, it's an amazing book. At least if anybody wants to start in short, your teenagers, start them with the Rich Dad Poor Dad. Let them start reading. I'm not one of those people that are here, no. I'm a vice president of technology, right? So I'm just sharing my knowledge just to bless as many people as possible. Thank you all for tapping out the live. Really appreciate that. Let's do that. Let's get it to 20,000. Let's get it to 10,000, then 20,000. Thank you so much for doing that. So I tell you one thing, and as I'm wrapping up, I'll tell you one thing. It's a flow. Diversify your portfolio using ETF. Then go to real estate. Okay, it's a flow. So it starts with your income. Never despise your income. Make sure that you're working. You are making sure that you are increasing your income. You are negotiating your income. You are checking yourself out. How can you increase your income, right? Put out your resume. Just see what you are worth out there, right? And then negotiate with your employer from time to time. Have some other supplement your income, right? Take another certification, right? You don't have to go back to college. Take another certificate. Take free training. Go on Coursera. Google Coursera. Go on Harvard Business School. Free training right there for you. Do it. Add it there. Increase your income. I increased my income by 30,000 under 5 months. In less than 5 months with less than $1,000. That is how you do it. But when that income increases, or you change your job, either by change of job, either by any way that you increase your income, or you supplement your income by riding Uber, doing Toro, doing rental arbitrage, or selling on Tutti Shop, you are not increasing your lifestyle. What you do is you are putting that money towards investment. What is the first investment you are going to start with? You start with ETF because it's easy for you. It just gets your confidence level up. It gets your confidence level up. You can set it up. It's easy entry. Set it up one day and you can start investing. And you set it up one time, you leave it, you let it ride. Your money doubles its value, right? Like that as it grows. Now, it's very, very easy to set up. So for people that want to start investing, you want to you're a beginner investor, it's going to I always say ETF. Now, because of that, I talk about the 4 pillars. Because of that, I talk about income. I talk about your ETF, smart. So I have the smart investing workshop that is coming the week of May. The first week in May, I think that's going to be May the 2nd. So be on the lookout for that. It's going to be the weekend, yes, the Saturday, May the 2nd. It's going to be a workshop, right? Where you set everything up and you get it done, right? It's going to be your choice and all of that. You have it. Registration is going to be required. It's going to be free, but registration will be required, right? Just the registration will be required. So be on the lookout for that. The flyers and the posters will soon come out. The reason why is that whenever you cross, I've made up my mind in this 2026, you don't have any reason why you will not invest or build wealth. I've said I made it a point of duty that anybody that crosses my path, and that's why I always beg, please tap out, share with your friends, because I want as many rich as possible. If you cross my path, I will tell you what I know. I am not gatekeeping. I tell you and I teach you what I know that have built me wealth, not $1 million, multi. Let's leave it that way. Okay? Not that. So I'm just sharing it because it is so easy. It's so easy to build wealth. You don't have to pull your hair, but people always want it difficult. They feel that you have to break your head and all of that before you make money. And I say it's not, because it's worked for me, it's working for all of my clients. All right. So having said that, now if you put the investment, the smart investing workshop, that is going to be on May the 2nd, right? So clear your calendars, get ready. It's my classes. It's going to be very simple, but you need to get your pen and paper. I'm a professor, so it tells you something. The class is going to be in session and it's going to be locked in. That's why I'm not doing it here. It's going to be across all platform, on YouTube, on Instagram, but it's not going to be here. It's going to be on Zoom. That's why registration is required. It's people that register. Those are the people that are going to get in, even though it's free. And it's going to be limited slot. Once it's full, it's full. The training is going to be one time. After that, it's either you get paid. It's either I do it where I get paid. I get paid for it, or I get paid for it, or I never do the training again. Just something like that. So take your opportunity and come, and because now you don't have any excuse. I don't know how to start investing. Now you now know how to. You will know how to do it. You have somebody that is with their hands on, that will help you. Whatever issues, that we'll talk about it right there. We'll talk about it. Training. For people that have been in my training, I think Tiffany Motto, you have seen some of those, my training, you will be able, I break it down like a baby. So even a baby would understand. A little, someone in elementary school would understand. So that's it. If that's your fear, the education is that you have the other thing is that we talk about mindset shift. Then we'll talk about how can you even raise the money, right? For instance, some people would say, I don't have money to invest. I cannot do Roth IRA. I can't. The reason why I can't do Roth, I don't have money. The money is not enough. But you are paying taxes even with your minimum wage. Are you not paying taxes? Do you tell Uncle Sam? Do you tell IRS, I don't have money, I'm getting minimum wage? Do you? I guess not, because they will still pull your taxes. Otherwise, you end in jail, right? You end up in jail. So understanding that you pay so why can you not pay yourself? But you can afford to buy lunch. You can buy things on this TT shop. Some people are shopping every single week on this things that they don't need, things they don't need, they need and they don't need. They are buying every single day. But then invest, it becomes a problem. Because we invest for 10 years is a problem. Do 9 to 5 for 45 years. Oh, I'm all good. Isn't that a psychological thing? So having said that, we will do that training, okay? When I did the training on real estate bootcamp, it was for free. When it became a cost, people started rushing to pay for it. So isn't that a psychological thing? So anyway, let's put that on the side. So be on the lookout for the Smart Investing Workshop. Start saving your money. You are not investing for me. You will be the one to pick whatever asset. I'm going to just enable you, right? Tell you and enable you. This is it. This is the buffet. Now choose. Within this buffet, your chances of your risk is within this risk tolerance level. Risk tolerance level. Are you high? Are you medium? Are you low? What's your age and all of those kind of things? That would determine. Then you split your portfolio, diversify your portfolio. Let's say diversify. Thank you so much for that, Otto Junior. Let's keep liking. Let's get it to 20,000, guys. Let's get it to 20,000. Let's get it. Then I'll talk about real estate. Then I will talk about real estate. Motto, Eden, Tiffany, SS3, True, Mayalistic. Yeah, let's keep liking. Thank you so much. And if you are interested in the Smart Investing Workshop, you want to start investing, but you don't know how, put one in the comment. Put one in the comment. If you want to start investing, but you don't know how, or you know how, but you are just too scared to start. You are worried, I cannot start. Put one. Okay, True said one. Any other person? And when I'm saying investing, I'm not saying 401k, because 401k is your employer that's forcing you to do that. Do you have anything outside of 401k, or is just 401k? Because you should have at least 4. There's 401k, there's Roth IRA, there's HSA, then there's your brokerage. So if you only have one out of all of this, which is 401k, then you are missing the remaining 3. Right? You are missing the remaining 3. So Be Thank you so much for that. True, right? So be on the lookout for the investing workshop, the smart investing. It's not investing, it's a smart investing workshop. So this is how you invest smartly. That is coming up. It's going to be free, but registration is required. Now, the other investments that we talk about that pays you in 6 different ways is the real estate investing. Real estate investing, like I said, appreciation, equity, cash flow, taxes, other people's money, leverage, six, right? That's how you get money when it comes to real estate. For the people that, this one, I tell you, it requires 3 things. Unlike the ETF, real estate ETF, you can start it, figure it out, let it go. You can make mistake and lose a little bit of money. When it comes to real estate, please do not. It requires you 3 things. Number one, it requires, think about your down payment. I talk about how you can get your down payment. You can even do it with the zero money out of your pocket, right? Zero money out of your pocket. As a matter of fact, when I'm buying property, I'm buying it at 20% of the value. Like, I'm buying the 80% of the value. So I always buy it at the least. The highest I can buy is it has to have at least 20% of equity when I'm buying. So 200,000, I'm buying like 160,000, thereabout. That's what I pay. All right, 320,000, I'm paying maybe like 250,000, something of that nature. That's how I buy. Now, when it comes to, so number one is your down payment. Number two is your credit, right? And number three is education. The first two, you can easily, some people already have it, your down payment, or you can get it yourself one way or the other. Number two is your credit. With credit, how do you know what author? Can you clarify? How do I know what? How do you know how to buy right? Or is that just complete the sentence? All right, let's keep tapping now. Let's get it to 20,000, guys. Thank you so much. So, number one is your down payment. Number two is your credit. Yeah, 20%. No, I'm not saying 20% down. Yes, 20% down is your investment property. Investment, you require 20% down. 20% down. If you are using FHA, you require 3 to 3.5%. Conventional is between 3 to 5%. And then VA is 0.25 to 0.75 less of whatever of the conventional of FHA. All right. But what I'm saying is, I'm not even talking about the down payment. What I'm saying is that whenever I'm buying property, I am buying it at 80% of the value of the property. So if the property is 200,000, I'm buying it at 160,000. So 20% less of the market value. And you're wondering, how is that possible? Yes, I make it happen, right? I did not steal it. I did not kill them. I make it happen. That's part of the strategy that's part of the system that I teach. Okay, that's part of the system I teach. So real estate is, aside from, think about it. I already have 20% in equity and all of that. So that's the beauty of real. That's what I mean. Okay, 20%. Yeah, that's it. So it's a system. Income, invest. You take your income, you save some of it, you put it into investment, then you put it in assets, right? Start with ETF, then you put it in ETF. Once you raise the down payment, remember you need down payment for real estate, but you are not putting it in the bank when you are raising the money, right? You put it in ETF. Once it grows, you have your down payment. Then once you have your down payment, right, then you go buy your property, right? You buy your property, then you do it again, right? Start saving money again from your income. Of course, you now have cash flow from the first property. Once you have cash flow, remember, if you took you 1 year to get a down payment, now you have 2 streams of income, because cash flow from the first property and your income, when you add the 2 of them, you probably will have your down payment for in 9 months the next time, or in 10 months. So, and that's how you do it. That's how you do it. That's how you build wealth. That's how you build wealth. You make it a cycle. So it's not like pick and choose and all of that. So it's like a system, instead of you saying, I want to pick this. A lot of time people just say, oh, I just want to focus on this. No. It's a system, all of them. And then as you are building it, you get to a point where you get to a certain point of real estate and you say, okay, you know what, I want to diversify. You start doing business, you start buying franchises of, like in McDonald's, you start buying apartment complexes of 1,000, 10,000 units. Right there, that's where you're going. Right? I always say that if you cannot perceive it, you cannot achieve it. So think about it. Where do you want to go? Right? Because you get to a certain point when you say rental, you already have 5, or you have 10. Do you want to get to 20? You want to get to 30? Those are the things. So having said that, if you want to learn ETF, be on the training is going to be May 2nd. If you want to learn the real estate, please get that education. If you want to learn real estate, then there is the real estate, what's it called? It's a real estate boot camp. We have it. It's a course. I would say a system. It's a system. So all of these questions that you're asking about, how do I get 20%? How am I buying it 80%? You find it there. Down payment, you find it there. What are the payments of the financing option? You find it there. You have, your credit is not at the 730, is not really high. You get it there. Mortgage calculator, you have it in there. Rental income calculator, the 1% rule that was it Otto that said it earlier, that is not in all cases, they're expensive. You find it. How to find deals, you will find it. All of those kind of. Then the other thing, one of the biggest thing, the headaches that comes with tenants. You want to talk about headaches that come with tenants, because if you do not, property management is very important. The 2 things that can make or break you in real estate is, your purchase, right? No, 3 things. Your purchase, the rehab, right? You can skip the 2 if it's a turnkey, right? If it doesn't require any repair. If it's a turnkey, then you don't need rehab, right? But the first thing is your purchase. If you buy it right? And then if your exit strategy, right? Which is either rental, sell, or whatever, if you don't, those 2, and those are the things that get people frustrated. Those are the people where you see people would say, oh, real estate, I made a loss in real estate, because they got those 2 wrong. And those are the things that were addressed in the real estate system, like the system. The real estate boot camp is a 4-module course, right? Which addresses everything that we just talked about. Everything, for people that are interested, so please, you don't have to buy the course or the system or whatever. You don't have to get it from me. But please, before you invest any dime in real estate, go get a training. I lost close to like 100,000 investing in the stock market, individual stocks, because I did not get education. And that's why I don't want you to do the same thing. My friend, I lost it to penny stock, day trading, and a little bit of options trading. That's why I don't teach that. Because I have understood, I have seen ETFs have helped me to build wealth, and real estate has helped me to build wealth. These penny stock, day trading, and options took money away from me. There are some people that know it. It's do I say that every day somebody cares to say I lost a lot of money too? So but also somebody was here yesterday. Olex told us how she lost money in real estate, but she even went on a training and paid 40,000. I'm still wrapping my head around. She said she got the training for $40,000, and then she's done it. She bought property. But this training, she got the training as well yesterday. This training, and I think a few people, Tiffany, Moto, did you get the training? Can anybody just put the comment how it is like? This is going to start with your mindset shift, how you're going to get your down payment, your financing option. If you're outside of United States, where if you want to buy, and how you can use the same information, that the data and information, how you can use it out of United States. If you're in a New York or you're in a location like California that houses are very expensive and you're not missing out of this, how you can buy, what are the strategies available for you, how you can 10x your real estate business, right? How you can 10x it. All of that is what you find in the course. I call it a system. It's not it's because it's beyond a cost. It's a system. It's a wealth building system, because if you do it and follow the steps, it's a you do it and follow the step, what you realize is that you will build wealth, right? It is going to cost you, and let me show you for those that are interested. I know Otto was, or who was asking about, I want to invest in real estate, but I don't know where to get started. Yeah, and that's 2:15. It's time for me to almost go. You'll find it on my page right here. You find it on my page right there, nestyou.me. You click on it, you click on open anyway, and then it brings up this page. You will find it right here. Buying the system to buy your property in 90 days, even with your 9 to 5. I was buying, I own and manage, not own. When I say manage, it means I do property management. I own double-digit real estate portfolio. You can go on my page. When I did inspection some 3 weeks ago on some of the properties, you have an idea of what I'm talking about, the kind of properties I'm talking about. I'm not one of those people that own multi-unit and then they call it 10 doors. No. Yeah, on my TikTok page. You'll find it on the bio. So you find it right here. You click on it, it comes here, and then you would have it's the system to buy your rental property in 90 days, even with 9 to 5. I did this with my job as a vice president of technology, did it as a lecturing as a professor in the university, teaching AI cybersecurity and deep learning, and of course running a family at the same time, and I'm managing it by myself. So it means the reason why I decided to manage by myself is because I'm able to tell you, everything about property management. Things you need to look for when you are dealing with a tenant. How your tenant will not turn you to their slave, right? Because, one of the popular things, they will say, oh, you start cleaning toilet you change the bulb. How that is not going to happen? Because why would a tenant, why would a tenant tell me to come and change bulb? It depends on the structure that you put in place, right? So right now, you would see it. It's right now is at $69.99. It's only at $69.99. The price should have changed yesterday. It's because some people wanted to buy yesterday. They were at work, so they said, please still leave it at $69.99. Please, they begged me. That's why it's at $69.99. Tonight, by after 6 p.m., it becomes $99.99, right? And for everyone that makes the purchase right here, right, you would also get a strategy session with me, right? Not individual session, but it's a group of individuals, right? Anybody that makes the purchase on the live would also have where you can ask any question that you have, and then you will also have access to the closed community. That's going to come in the closed group. You're thinking, where, Dr. Lina, where do you get all those your 80% property or 20% down, like we're asking Otto? I will be dropping some of those deals for you in that group. But of course, it's a first come, first serve. It's you might have to do some bidding. Then you will be able to ask, okay, if I see that it's a good deal, I put it out there. I'm not buying it, so I put it out there just as a benefit. It costs you $69.99. And by the way, you can use it to file your taxes next year. So for people, just keep the receipt. The $69.99, or it becomes $99.99 tonight, actually. 16. So if you don't buy it right now, so if you buy it later, keep the receipt, and you would see it under number 8 right here. You will see professional fees. Under professional fees, use it to file your taxes. So it's $0 to you. That's part of the strategy. That's why I say I teach a system. That's part of the strategy that I use, that I teach, because it's $0 to you. But guess what? You would learn so many things. You would learn a lot. And I know that was it CC was asking earlier about how do you want to meet me? You can get a one-on-one consultation. You can find it here as well. And then you can find my ebook. It's like step by step, you will find it there. But in whatever thing you do, you want to invest in real estate, I beg you, do not start investing without getting education. And it has a 3 months plan. Now it's a 90 days plan. Month number 1, what should you do? Right? Number 2, What should you do? Number three, month number three, what should you do? So it means that by summer, you should have your property. You have issues with your credit because except you are using cash, you will need your credit, right? You will have the 5 C's, right, of credit, the things that the lenders would always look for to get a good rate and all of that. You have it there. The financing option, you would have it there. How to identify this is a deal. Under 5 minutes, you will know that this is a good price, right? Or this is not a good price. You will be able to determine that. All of the different tools for you to determine what should be the rent, what should be the price of a property, determine your rental comes, rehab, what's it called? Rehab section, how to deal with your contractors. You find it there. Everything is then eviction, then different exit strategies, the different neighborhoods, everything. It's, trust me, it was well thought of. It was something that I have done for the past over a decade, that I am just not just over a decade doing one property, not two, double-digit real estate portfolio. So you are learning. This is when I did this 13 years ago, or over 13 years ago, when I started investing in real estate. I paid 99999, like $1,000. That's what I paid. Reason why I paid it, you would understand, because me too, I would typically say, oh, I'm not doing this. The reason why I paid it is because I had just lost money close to like 100,000 in the stock market. A lot of people at that point will say that I am done with investing, but Dr. Lina I never take a no for an answer. No, I always find a way. What is the way, right, about investing? So even though it was not my money, I was doing 529 for the kids, and the 529 was not generating any money. It wasn't making any, and then on top of that, it was bureaucratic. I knew that, okay, at some point, possibly my kids would get scholarship. And if they get scholarship, what happens to the money? It's now that I know you can take up to 30,000 or 40,000 and put it on board, but it takes the money further and further away. I want something that they can use at their own time, right? So, and that's how we got into real estate. So because it's the kids' money, because I'd lost money, I went into a training. Trust me, that training was not half of this. It's not even as half of what I have here, because the training was about how to buy, how to do all of that. But in terms of property management, that wasn't there. International buying, that wasn't there. Out of state, that wasn't there. Credit, all of those things, that wasn't there. But guess what? I paid $1,000 to get it. That $1,000 has done I've done not just one thing. It has not just given me $1 million, it's giving me multi. All right. So really, and just so I say this because a lot of times people just feel that people are on this space to sell something or whatever. Sorry, yes, I'm selling something because I realized that I did the training for free. Over 100 people, maybe 60% of them joined, but where is the 40% when it was free? But guess what? People pay for it now. People are paying as of last weekend. Not this last weekend, it was $39.99. Now it's $69.99. People are buying it. Tonight it becomes $99.99. Next week it goes up to $199.99, and it keeps going up like that. Now you can take your advantage, take the opportunity. Whenever for this money that you're paying, you are not just paying it for yourself, you are building it for your generation. What does this mean? Whenever I buy the property and all of that, when these kids, if let's assume they get scholarship, or even if they don't get scholarship, I take money every single, whenever it's time for college, I take the money and I put it towards their education, right? Take cash out refinance or use an e-lock, take money, finance their education, right? And then the property is still there. Guess what? It's the tenant's money that I put that. It's the tenant that is still going to be paying it, not my money. That's the beauty of real estate, not my money, right? When I do that, and I can still file depreciation, I can still file that the property is depreciating in value. I still get more money from IRS, right? When I have that money, basically, what am I doing? When these children, let's assume that it gets scholarship. What happens if the person decide to be a doctor, a medical doctor, and wants to start his private practice? What do? I give them their house and say, congratulations, you earned it. Or they're getting married, congratulations, you earned it. What have I done? I am not just because my kids are also involved in this. They're involved in inspection. They're involved. They already have their Roth IRA. They already have what's it called? Authorized user on the bank account on credit card. So they are building their credit already. So whenever I'm talking about something generational. All right. That's what I talk about. It's not going to end with you. So it's not like I'm going to give them the house and they're going to waste it. No, they're going to use the house and they're going to build it, use it to build more properties for themselves. When their friends and their counterparts are graduating from college and they are coming with student loans, guess what? What are they getting? They are getting houses. They're starting on a positive. What have you done? You have just created a generation that is going to be ahead of their peers. And guess what? The next generation, you embark in my grandchildren, you have to do the same thing for them. They will do it. That's why 3 generations, and you see a certain line of tribe, they will say that, oh, there is this generational thing that is going. That is how you build generational wealth. But it starts with what? 69, 99, that becomes zero next year. So it all depends on you, right? If you might buy this or not, you just make sure you get education. So that is the thing when it comes to real estate will build you wealth. It's and I'm not just undo, but you need to get the right education. The right education. So for anybody that gets it, that wants to buy it, you can definitely it comes with the slides. So it comes with four modules of videos. So people that want to just listen to videos, it has the slides. These are the slides. So you get copies of the slides. So it's something that you can actually take your time and study, right? You have the slide, you have the video, and on top of that, you have access to the closed community where you're getting a deal of less than 80%, or less than the market value. Ultimately, based on what I always say, it starts with your income. Start with your income first. When you take your income, you use it you put some of it towards your bills. If all you do with your income is 9 to 5, you pay bills, what you realize is that you are just paying bills. You are just paying bills, trading your life for money, right? That's what you do. And by the way, these that I just said, that on my page, you'll find it on Instagram. It got 1.6 million views. 1.6 million views just because it resonated with a lot of people. A lot of people are trading their time for money. Not that they are trading their time to pay bills. It's okay to trade your time for money, but what do you do with that money? That's why somebody earns 500,000, but the expenses is 600,000. The person is at a loss. But somebody earns 100,000 and saves 50,000 and invests the 50,000. That person is better off, right? So it starts with what you do with your income. What you do with your income, take some of it, fund your bills, your basic needs, and then save some of it and use it, put it in cash flowing assets like ETFs. Start with ETFs, okay? And then grow the money. Once you have your down payment, put it in real estate. Then you put the down payment of your first property and enjoy the 6 paychecks. Do it again, right? Do it again and just let it flow like that. And that's how you build generational wealth. All right? That's how you build generational wealth. So I would have, let me see. That's how you build generational wealth. So for the Smart Investing Workshop, be on the lookout. For the people that already got the boot camp, the real estate boot camp, or the real estate boot camp systems, right? The system boot camp, real estate system boot camp, or whatever. For those that have gotten that, you will get, once you are in the Telegram group, you will get notified the minute. You'll be the first set of people to know about the Smart Investing Workshop that is coming up, so that you can quickly register, because we have limited spaces. So you guys can get your own spaces first, then every other person can get in right thereafter. All right. So Smart Investing Workshop is available to help get you the education when it comes to training on smart investing. And then when it comes to real estate, you have the real estate boot camp. That it's a course that can help you start with real estate. I said this year, you don't have any choice. It's gone are the days when you have excuses. Oh, I don't know how to build. I don't know how to. It's because I don't know how to buy real estate. Now you have the option. It's here. I don't know how to invest in the stock market. Now you have the system to invest. It's right there. You have the training. Once you have the training, all you have to do. I also talk about one other thing that I always talk about is a lot of time we say we don't have money. But guess what? Some of them have spent $27 today. We have spent it on Starbucks and lunch, right? This is 2:30 already. You've traded 6 hours. If you're in Eastern time, you have traded six hours, 30 minutes of your life for money. And some of us are going to sit down in one sitting. We use that money on something that we don't even need, right? Just to impress others or, buy lunch. You don't have $27 for lunch, but for investing. Because that's all that it takes you to save $1,000 a month. Right? You don't, but guess what? You have bought Starbucks today, $5, and the little sandwich that comes with it is $6 or $7. Your lunch already, you've already spent another $15. But guess what? You do not have money to invest. So it's not that you don't have the money. Just say that I have the money, but I decided to make choices to do Starbucks and lunch versus put money towards investing. So whenever the future comes, know that, okay, I enjoyed myself today for the benefit against tomorrow. All right. And it's okay. It's about choices. But just know that you make choices. But what I would advise is that make the right choices. The choices that will change your life, change your generation, make sure that when you retire, you are comfortable. And if you are waiting on Social Security benefits, I hope you know that Social Security might not be there at that point. And I know that, and people as well, unemployment. If you think that 30,000 people got laid off in Oracle, I'm not saying it's going to happen, but those people that it happened to, those people that it happened to, trust me, that was that same prayer. They did not, it's not like God ate them, right? He created them as well. But guess what? They are laid off. If they never have an emergency fund, they never have, they don't have retirement, whatever. Guess what? Right now, they're already having panic attack because some of them don't know how to pay their rent. That was the story of one of my tenants that worked in IBM for 25 years or 23 years. IBM has so much money, but guess what? After 2 months, we had to do eviction. And that's the reason, this same story was the reason why I actually came out to start talking about financial, because I realized that there's a lot of financial education gap within our society. And it's not anybody's fault. It's because it is not taught in the curriculum. It's not in the school curriculum. There's so much knowledge gap. They taught us to get the skill, become a medical doctor, lawyer, IT special, nurse, whatever, right? Engineer. But guess what? They did not tell you. They tell you to make that money, but they did not tell you to build wealth. So if all you are doing is you are earning $500,000, you are just earning. Because the day you are not there, or the day that job is not there, that's it. Right? But we will need to transition from being an earner to an owner. Ownership is you are not there, you are making money. I'm not here in any of my properties right now. I am making money. On the first, you start seeing those sales start coming in. You start seeing those sales coming in every left, right, and center. So as I get my paycheck as a vice president of technology on the end of the month, I'm also getting plenty paychecks, even way more on the first of every month. And that's what you need to do, such that if my vice president job is not there, because I don't have control over that tomorrow, if it's not there, but I still have my zeal that's still coming from that is where my money is been working for me. And that's what you need to do, right? If you can get it right now, it's $69.99. Everyone that gets it will get the strategy session in the live call. Outside of it, you can still go and buy it. Outside of this live, you will not get the strategy call. You would also have access to the Telegram group. It's $69.99, but from tonight, so tomorrow, if you see me, it's going to be $99.99. So yeah, and you can come back tomorrow. You would see that the price would have changed. And by next week, it becomes $199.99, which is the regular price. I'm just doing all that I can. No excuses why you should not build wealth. So your conscience will tell you, right? Your conscience will tell you that, oh, you know what? It was me. I did not do it. And you can actually claim it as taxes next year. If it's $69.99, $99, whatever. Any training that you do that relates to real estate, you can see. You can definitely find it here. Interest that you talked about, you can claim it as taxes. There's repairs, there's taxes, there's utility, wages and salary depreciation, insurance, commission, cleaning and maintenance, travel and expenses, auto expenses, advertising. Those are things that you can actually claim on your using the tax. What do I mean by that? It means that if you have your W-2, right, you're supposed to pay this level of taxes. This is income, right? You can use if you have losses on this side, right, on your real estate side, definitely you would, all those expenses like property taxes, interest, insurance, for HOA, all those things, you would, legal fees. So you have eviction, you had legal fees. Like this professional fees, you're going to get a receipt. All of those things, you can use it to reduce how much you're going to pay tax, how much you're going to pay in taxes. That's what you do. And that's what the wealthy do, right? That's why the middle class pays the highest level of tax. Otto Jr. said, yes. I tell you that your social security might not be there because it's our own money right now that they're using to pay the old. These are own money. As right now, that's what they're using to fund the current people that are retired. And the truth of the matter is, at the time when they set up that project or whatever we call it, at the time when they set it up, they did not, the life expectancy was way lower than what it is right now. So I think they thought that the life expectancy, I read it somewhere, maybe it's going to be like maybe 60 or something, or 70 or some thereabout. But people are growing older, 90, 95, 100, they're still here, 85. And that is already taking money because they do not expect that these people will live to that length and, and they have to pay them. Somebody said yesterday that some of our clients, or because she's a psychiatric whatever, mental health doctor or something, that she was here yesterday. She said that some of our clients or patients, they get $40 a month. That's what, in terms of little cash that they give them after they have paid whatever a board or something, the boarding and all of that, they only have $40 left. You don't want it to be a situation. And if you are waiting on your children to be your retirement plan, please change it. Change it, because those children at that point, they will have their own bills. Our own bills is higher than that of our parents. So you know that their own bills will be higher at that time. So they will first of all take care of themselves and the family before it comes to you. So you want to, as much as possible, take care of, even if they bring, let it be a supplement. Don't wait on their own. Okay? Do not wait on their own. And this is me talking about wealth coach right now. I stopped teaching. All right. So if for anyone that gets it right now, real estate bootcamp, the system of how you can buy your real estate in 90 days. You can still get it. Is at 65, it's at $69.99. $69.99, that's what it is. Tonight it becomes $99.99. After 6 p.m. it becomes $99.99. And by next week again, it becomes $199. Okay. All right. And for those that are beginner investor, or you have not been investing, or be on the lookout for the smart investing workshop that is going to help you with ETF, how you can set it up, the accounts and all of those kind of things about investing, like investing in the stock market. If you want to buy individual stock, how you should look at it, what are the strategies around it, that is coming. That's also going to be free. It's going to be free, but of course it is going to be free, but registration is required. It's going to be the May the 2nd. So be on the lookout for it when the registrations come out, so that you come and get this, learn this for free, set it up. You don't have any excuse. Do not say I did not help you. Let's keep tapping out the light. Thank you so much, Otto Jr. Moto Tammy, are you True? SS3. So True, you asked the question, how would you you would like to have to talk to me? You can find it right there. SS3, Everyday Glow, Ecclesia Plus. How are you? Mayalistic. Okay, Chuku. Yeah, and feel free, ask question. Yeah, ask question. Ask question. And really true, if you have question right now that I'm still here, if it's a quick one, this is going to be free consultation. You can bring yourself up. I still have few minutes and we can quickly talk about it. If you otherwise you can book a 1 hour strategy call. So you find it's a one-on-one. You find it right here. It's going to be your time consultation and all of that. But you know how to. Do you want me to invite you up if you have any specific question you want to ask right now? You know, so far I'm here. You can always ask any question, and it costs you nothing. All right. All right. Great, 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 great. So you can still get the invite me. Okay, I'll just invite you quickly. All right. I just have few minutes because I have the school runs. So let's quickly. I did invite you through. Oh, I did invite you. Did you not get it? Hey, Tammy, thank you so much for the likes. And if anybody has gotten the course, please put in the comment, how is it going for you? I know that we haven't done the group. Okay, go ahead. Hey, True.
Hey,
Hi.
how you doing?
Good, and you?
I'm doing great. So I'm a new beginner and I want to start investing. Is there any possibility that we can do it later, like one-on-one?
Yeah, absolutely. That's why I said, yeah, just if you want something one-on-one, it's right here. Just just find it right here.
Oh, let me see.
Yeah, just click on it. We can, we look at your portfolio, you look at your income, anything. It's your time.
Can you send me? Can you? Oh,
Send me a DM and I'll send you the link.
okay.
Yeah. Send me a DM and I will send you the link right away. So you can have it done. And right now it's at the discount, so you are just lucky. So we'll set everything up, 1 hour. It's your time.